really excited about this next session. Before we get into it, I'm just going to introduce myself, actually. My name is Jumana Bersecci, and I'm going to be introducing the next couple of speakers. I come from a finance background, and I did have the pleasure of covering James back in the day, and he was very good at ignoring my calls when I used to call him. But here we are, and it's really, really exciting to be here and to be a part of this launch day. We've got a fantastic number of panelists lined up and many different speakers, so hopefully you'll enjoy the day. The next session is going to be about Bitcoin and specifically about digital assets. I was saying that my background is originally in finance, and it isn't that often that completely new asset classes are created. It doesn't really happen. And there's been a lot of focus, a lot of hysteria almost, about this advent of cryptocurrencies, what it means, and the public seems to be pretty divided. There are lots of haters out there, and there are lots of people who actually do believe that this new digital form of currency will take off and will have some longevity to it. So I'm very, very excited to introduce our next speaker, Muhammed. Just a little bit about Muhammed as well. I mean, he, back in the day, was also an equity fund manager. He worked at York Capital, SAC, and after that, Carmignac, before starting his own fund. He will be launching a fund dedicated to digital assets specifically. But I should tell you something else that I think is quite interesting, and that Muhammed will be donating the majority of profits from his new fund to charitable causes. So with that, Muhammed, I'd like to welcome you to the stage to tell us a little bit more about the opportunity set in digital assets and also about your fund and what motivated you to donate to charitable causes.
Perfect. Thank you, Jumana. If this thing really kicks off and we have a distributed ledger where everybody has the exact truth and nobody can challenge it, then that changes the world. That changes how we operate, basically. You can think of it like a notary being present, or you can call it like a marriage certificate. Why do we have marriage ceremonies? To let everyone know that those two individuals are now married, basically. So from this point of view, I just want to start with my own personal story. My own story was, I watched this video, I did more work. Back then, the data was really, really unstructured. So you had to do a lot of digging here, video here, a letter there, a bit of an article somewhere else. And what happened is, I bought a few Bitcoins, and then I decided I want to test it. So I chose a Sunday, and what I did is, I was living in London, and I sent $180,000 worth of Bitcoins from London to Turkey, to my friend who's living in Turkey. I showed him how to open up his wallet. He opened up his wallet on his phone, and I sent my $180,000 worth of Bitcoins to him. He then forwarded it to another friend of mine in Dubai. He sent it over to Iran. He sent it over from Iran, from Tehran to Japan. From Japan, it went to Frankfurt, and from Frankfurt, it came back to London. That trip on a Sunday took approximately 6 hours. $180,000 going around the world on a Sunday, touching Iran. Was $180,000 going around, took us 6 hours. That whole trip, again, on a Sunday, where all the banks are closed, cost us, back then, $18. And the $18 that we paid for the full trip, that I paid for the full trip, wasn't actually the fee that the blockchain miners for the ledger are actually charging. It's all those wallet providers, like the companies that are setting up these businesses where they're charging incremental fees on top of what the technology actually requires, basically. Today, you could do the same thing currently with probably $1.50. So you could probably send, at the moment, $10 million, $100 million, $500 million across the globe. It would come back to you in a couple of hours, and it would cost you a few dollars max. Now, that is 1,000 times improvement to what we have currently. Any one of you around here who either runs an e-commerce shop or who's doing international payments or who's got relatives abroad, etc., will know that how stressful and how struggling that is. That was my personal story, that when I saw that, and actually could see that I could trust my friends that they would send the money back again. When I saw that, I said, like, okay, this is significant. I need to dig into this, basically. And that's when I started my own journey into this. Now, I want to give you an example. A lot of you guys, especially looking at the price, a bit like James when he alluded to it, when we talked about it, it was $800, now it's $8,500 or $9,000. You know, a lot of people, they think, okay, I missed it, you know, it's too late, it's done its course, basically. I'm not going to be here to make a prediction, a price prediction. The only thing I want to say is, this is a US technology adoption curve since the 1900s. Most of the technologies that we are now using are on this chart. I'm sorry it's a bit small maybe for the people in the back, but you basically have everything from the telephone to air travel to color TV to credit cards to internet to social media, etc. As you can imagine, as time goes by, the curves become steeper because adoption is faster, especially with things that don't require physical purchases like a social media account, etc. But just to let you guys know, even with all the hype that we currently have around this topic, approximately on our numbers, and we've done those numbers internally, we're around 70 million people that have Bitcoin. So as it says here, I don't know if you can see it, that's where we are in the adoption curve of this technology. So this is not like many people on the negative side call it as like Internet 1999. It's actually Internet 1994 at best. When I looked at things and I realized, look, since then, markets have gone berserk. Now, given this is a mixed crowd, I won't go into details, but basically, more or less, for this amount of earnings, you're paying now a much, much higher price in equity markets today to buy the same amount of earnings. Now, why is that? It's a very simple phenomenon. It's nothing complicated, although we on the hedge fund side, we always pretend our job is really complicated. It's actually the interest rates, right? So if the interest rates are really, really low, then our discount rate becomes really, really, really low, basically. And if our discount rate is very, very low, the terminal cash flows look like really, really high because we're discounting at a much lower rate, and therefore everything looks cheap, so to say, right? This is really what happened, and it's been one way since the 1980s. So to all, I'm sorry to call them out, but for all the UK property magnates, for example, they say like, look, I've seen it from 1993, I made so much money. The only reason you made that is because interest rates have been falling and falling and falling. Now, that has been a 30-year cycle, and the question is, we're now with $9 trillion of assets in negative yields. So today, if anyone in the auditorium would want to lend money to the Swiss government, you would have to pay for it. So, I mean, I know it's a bit difficult to grasp when you're not in finance, but that's the reality, and it makes no sense. But that's where we are today. So we saw that, we said as a team, you know, we don't want to go now with the herd. We want to do something that is different. We don't feel comfortable putting our own money into this type of setup where things can change significantly. That's why we decided to basically look at things that are in emerging asset class and focus on digital assets. But as we went on to the point of saying, you know, are we too late? We did this research, right? So we did the Google trend search, and we said, okay, so how many guys are actually Googling and looking for buying Bitcoin? And you can see that the number is significantly higher than on gold. When we saw that, we thought, wow, we're too late, you know? Everyone is already jumping on the bandwagon. But actually, when you look at the same search and you only search for gold or for Bitcoin, you can actually see that it's not even started, basically, right? Because the constant search for gold, and think of gold as the classical expression of store of value, basically, right? I mean, maybe not in the UK, because these are developed economies. As I said, I'm Turkish. We are number 4 gold owners globally, by the way. You know, if you're in Chinese countries or in China, or if you are in South America, in Southeast Asia, or as well in South Africa, you will see that this is an extremely important asset class for gold, for capital preservation, basically. So I want to go now and explain why we think that Bitcoin could become the new decentralized currency. And I want to go through with this and with you guys and just get everyone thinking. On the left, you have the 4 characteristics that economists call something to be called money, right? It has to be a store of value. If you would have £5 in your pocket, and you would know by the time you leave this event, it's going to be worth nothing, you'd probably try to spend it immediately. So it has to have some sort of store of value. It has to be a unit of account. So I need to be able to understand what it is so that we can exchange things on it, right? It needs to be a common unit. It needs to be a medium of exchange, as well as a standard deferred payment. The last point is basically you need to be able to pay your taxes with it, That's theoretically the ultimate goal of something becoming a currency. But on the right, we're looking at the characteristics of Bitcoin. So you can see on the characteristics of Bitcoin, for a store of value, it's of limited supply. I don't know if your video mentioned it in the first 3 minutes, but basically, by design, they're never going to be more than 21 million coins. So we will never have more than 21 million coins that will be in circulation. At the moment, 17 million, we just crossed it a couple of weeks ago, 17 million coins have been mined. 3.5 million coins, by the way, are lost in eternal internet space forever because people lost what is called their private keys, basically. It's a bit like, think of it like the same thing. Your grandfather took 5 bars of gold, dug it somewhere in the garden, and then can't remember where it was, basically, right? So it's a bit like the same thing. But those are the characteristics. The other thing that I wanted to put everyone's attention again is the fact that Bitcoin is divisible. With Bitcoin or with digital currencies, because you can divide it into 100 million units, this is the first time in human history where we can now have pricing on 8 digits after the comma. Think of what that means. Today, if you're coming to a cerebral gym, the best way would be that you stream the cash. Whatever you use, as you use it, it gets streamed, basically. You sign up, and you just pay as you go by minute, by millisecond, basically, right? That would be the best way, probably the fairest way to do this. But you can't do that today because we can't divide cash, and the transport of cash is actually inhibiting us doing that. With this technology, with 8 digits after the comma, first time people will be able to do that. Now, and on the other point that I want to make as well is in some countries, very progressive countries, like in some cantons in Switzerland, in one state in the US, you can actually now pay your taxes with Bitcoin. The minute you can do that, in Japan they're working on that, the minute you do that, obviously, that changes the whole landscape for this asset class. Now, why am I so focused on digital gold? Because I'm not going to stand here and tell everybody that we will stop using pounds, we will stop using euros, we will stop using dollars, and we will all be using this digital currency. I don't think that's going to happen in any short time frame in front of us. I know that the PayPal founder, I think, thinks that's going to happen, but that's not what I'm here. What I'm saying is, I'm saying gold was a great thing that in human history was used. It was, all currencies were backed by gold up until 1971, when we actually broke the gold standard, basically, with the Bretton Woods Agreement. We are arguing that Bitcoin has the ability to serve as digital gold, because the reasons why we had to break the gold standard are twofold. One, gold is not transportable. I cannot take gold with me in an ever-changing, globalizing world and convince my Chinese supplier, my Indonesian supplier or producer that the currency I'm paying him with is gold-backed. I would have to transport the gold in a neutral location to be able to prove to him that I have that gold-backed currency, basically. So gold is not transportable. That's why you can't have an economy in that globally that is gold-backed. The second problem is that it's not divisible enough. You can't divide gold at reasonable cost, basically, for it to be backing at a minute amount of cash or a minute amount of value. Both those problems, Bitcoin is solving. And actually, if you look at the white paper that Satoshi Nakamoto wrote and announced in early 2009, it's actually quite funny. A lot of how the protocol works, how the system works, how the rules are made up, is actually using gold-like features. So it's actually using all the characteristics that you have in gold mining, in gold exchange, etc. So that's actually quite interesting.
One more question about scalability. Visa can process 2,000 transactions per 2 seconds, I think. With Bitcoin, I believe, you may correct me, but it's only 2 transactions per second. How is this going to become more mainstream if it literally doesn't have the processing power?
Okay, so Visa can do 50,000 per second, okay. And Bitcoin can do about 5 to 7 per second, okay. Right? So, but it's the same magnitude, so it doesn't matter, basically. So the answer to that question is quite simple. It's exactly the same thing again. Think of 1994, 1999, when we first got, back then it was my dad that, kind of said like, look, here's this computer, and I asked for an internet connection, basically. It was dial-up, right? It takes us 10 minutes to even start looking at one other website, basically, right? It's exactly the same thing. We are at the very beginning of this asset class. Currently, there's a new project, it's 3 years in the working, but for a 10-year industry, that's quite new still. It's called Lightning. Lightning networks are channels that you open up as side chains on top of the Bitcoin blockchain that with intervals actually timestamp the action on the blockchain, which is then immutable, basically, where you can already do 1 million transactions a second. Not talking 50,000, talking 1 million transactions a second. So actually, looking at this technology and coming up like Rubini says, oh, it's not scalable, it's not this, it's not that, etc. I mean, all these kind of things. Look, the TCP/IP is a protocol on which the internet is built. The TCP/IP was a basic protocol that started, but now where we are, right? We have multi-hundred-billion-dollar businesses built on top of that. This is exactly the same thing. Bitcoin is a protocol. Smart people are looking at it. They will come up with solutions. They will come up with functions that are building, protocols that are building on top of that, like the Lightning Network, like side chains, like other blockchains, etc., interoperable blockchains, where you basically will see all these problems being solved, basically, right? But don't expect someone, when he comes up, to immediately produce the Ferrari, right? I mean, you first invent the car or the engine, and then it's 50 years later that someone comes up and produces the Ferrari.
Thanks for the talk. I just wanted to ask, in your view of the SDR, why do you think that the central banks will use Bitcoin and not their own version of a cryptocurrency?
Their own
version of a cryptocurrency, considering that...
What they will issue themselves, you mean?
Yeah, why wouldn't they issue one?
Yeah, I thought that this question was going to come, so I'm glad you asked that question. So the reason is the following. The whole point of Bitcoin, or actually digital currencies or digital gold, is that you don't need anybody to trust. It's as the video said, it's without third parties. The minute you say the national government is coming up with its own currency, then you're actually just raising question marks. We all have our phones, we all have our online banking accounts, we have dollars, euros, pounds, whatever we have on those accounts. We trust it, we know it's usable, we know it works. I can touch it, I can use the tube, I can buy my sandwich. We know it's there, it's not gonna go away, basically. So for a government to issue its own, for a central authority to issue its own currency, digital currency, makes no sense whatsoever. Any government that comes out and says, oh, I'm gonna do that, the only thing you're doing is shooting in your own foot, because you're accelerating the demise of fractional reserve banking. This might be a bit complicated now, but basically banks currently are producing money. And if you're doing what you're doing, which is an e-currency issued by the Bank of England, you're basically telling all the people in the country, you're saying, don't give your money to Barclays, or whatever Lloyds, give it directly to me, because basically you're telling them don't trust Lloyds. In another way, you've just handed out millions of banking licenses, so to say, because now I can bank directly with the central bank. The reason why I'm not banking with the central bank is because I can't. I have to bank with an intermediary, basically, right? So them coming up with their own currencies makes no sense whatsoever. I hope one of them does it, because that will just accelerate it, which then means the price will go much higher, which will be positive for us. But I don't think it's going to happen. Actually, Canada, England, New Zealand, these governments looked at it, and they actually left it. Like, they decided not to do it because they have enough smart people as well to realize that maybe it's not a great idea, basically. Thank you so much, guys. Thanks for listening. Thanks for being here.